There you go. So I'm going to be sending you this slide along with the recording thereafter. And I just hit record. So for those of you that are watching this on recording, there's going to be two big announcements at the end of this. So make sure that you stick around for that. One is a huge offer. The second one is an announcement. Okay. So option selling. Let's start with this. What is option selling? Why sell options? Now, most of you might not know, and I'm going to go to the simulated trading account here on Thinkorswim, but most options expire worthless. And most people probably don't know that most options expire worthless. Why is that? Well, options are essentially contracts, but technically they're bets on the market. Put options are bets that the price will go down. Call options are bets that the price of a stock will go up. And here we're looking at Apple. But the strike prices, meaning the price that people are betting on the stock with, are, for instance, on the put side, they go all the way down on Apple to $65, and on the call side go all the way up to $300, right? So you have so many contracts that are bought on the call side, what we call out of the money, which is above the current price, or bought on the put side below the current strike price, out of the money. So most of these options are going to expire worthless. And on a weekly basis, over 85% of options expire worthless. So this does not favor the option buyer, right? So you think to yourself, if over 85% expire worthless, it's basically a losing proposition, right? Now, there is a way to invest using options, which we'll talk about later, but we're just talking about trades here, right? Day trades, swing trades, etc. If most options expire worthless, then options obviously don't favor the buyer. But most people don't know that even as a retail trader, you can sell options. This allows you to act as a market maker. There isn't any market on earth where you could take any side or any position that you want. Options is one of the rare occasions, not just in terms of financial markets, but any market, that allows you to take any side instantly. You can actually sell options to people. This allows you to avoid the Greeks, implied volatility, crush, and theta. Theta is time decay because options are time decaying instruments. And you don't have to be 100% accurate, which I will show you why that is later, right? So when you buy a call option, you need the price, for instance, to go up disproportionately in order for you to make money. If you buy a put option, you need the price of the stock to go down disproportionately in order for you to make money. And disproportionately to what? To time decay. Because let's say that you bought the 185 call, for instance, on Apple, right? If Apple is not 185 by this date, then this option is going to be worth how much? Exactly $0. Okay. This option is going to be worth exactly $0. Someone said, how long is this meeting? It's only scheduled for an hour, but like I said, I'm going to promise I'll give you more time than that. Okay. So if that option expires at $0, then what amount of money did the seller make? Right? The seller who sold this option to you is going to keep that entire amount of money that they sold you that option for, right? And again, most people don't know that you could be an option seller. So let's talk about options from an investment standpoint, right? Like, how can you leverage option selling from an investment standpoint? Well, we first have to talk about what is a leap. Now, some of you on the call know what a leap is. Some of you on the call don't know what a leap is. A leap just stands for long-term equity anticipation security, right? And all it really means is buying a call option that is super far out in expiration, and you're doing it in order to replace buying 100 shares of stock. It's called an investment replacement strategy or a stock replacement strategy, right? So let's take an example here, for instance. How do we invest in Apple and get the gains that are equivalent to buying 100 shares of stock without buying 100 shares of stock? Okay. So let's say that we went out to the March 15th, 2024 expiration, which is about what, 8 months out from today, 8 months out from today. And we buy a deep in the money call. Let's say that we buy the 110 call for right now. The market is closed, so these prices aren't updating, but let's say it's around $7,200, right? Let me see if I can actually share. Can I pull up a whiteboard? Let me see. Hold on. Okay, cool. So let's say that we buy this leap for $7,200, right? On Apple, the 110 call on Apple. This is the 110 call. What is our break even on Apple, right? Our break even on Apple is going to be the strike price plus what we bought the call for, $72 or 7,200, because remember, each option contract represents 100 shares. Like I said, we're not going to have time to go into the basic beginning, but your break even on Apple by March 2024, if you bought this call or bought this leap, is 182. That means that if Apple is less than 182, then you're going to be losing money, right? But this only costs you $7,200. Now I'm going to get into option selling in a second, but why am I bringing this up? Because if you went out and you bought 100 shares of Apple at the current price, right? The current price of Apple is 178.6. Let's just say 178. You bought 100 shares of Apple. That's going to cost you 17,800, right? As opposed to 7,200. And you are getting most of the returns by buying this leap because it's a 0.9 delta. That means that you're getting 90 cents for every dollar, right? However, if you bought 100 shares, it will cost you 17,800. Now, what happens if Apple's stock price is 160 by March 15th, right? If Apple's stock price is 160, say it drops to 160, how much money did you lose here, right? You lost $1,800, right? Because you bought 100 shares for 17,800, and now your total allotment is worth 16,000. So you lost $1,800. If Apple's stock price is 160 by expiration, in the options route, you lost $2,200 because 182 minus 160 is 22 times 100 because it's an option. You have to multiply by 100. Each contract represents 100 shares. You lost $2,200. So a difference of $400, right? But it only cost you $7,200 to buy this leap, as opposed to $17,800 to buy 100 shares. Now, the beautiful thing, and like I said, we're going to get into option selling here. The beautiful thing about this is that you can actually sell calls against this leap. So when we talk about cover calls, right, and this is going to be covered here in hedging. If you own 100 shares, you can sell calls against your shares, right? When we talk about cover calls, a lot of people think, oh my God, I have to go out and buy 100 shares of Apple. How the hell am I going to do that? It's going to cost me 17,800. I don't have 17,800, but guess what? I do have 7,200, right? You can sell calls against the leap in the same way that you can sell calls against 100 shares. So here's where the hack comes in. And this is, most people don't even know how to do this, even experienced traders, right? Where you can make your leaps work for you. So if I bought this 110 call on Apple that expires in March, I can now sell calls all the way up until March. I can sell calls against that leap and generate income, right? So I can go out to the October 2023 expiration, and I could sell. Remember that my break even is 182 because it's 110 plus what I paid for the leap. The break even is 182. So anything above 182 is profit. I could sell the 185 calls against Apple for $3.50 or $350. If Apple doesn't hit 185 by October, I get to keep that. And then guess what? I'm going to go out to the next month and sell the November call. Let's just say you sell the November 190 call. In October, the November one will be less than this, depending on the stock price. But let's just take this as an example. I could sell the 190 call for almost $400. If Apple's not 190 by expiration, I keep $400. Then you keep doing this over and over again until you finally get to near expiration. Now, if you get assigned, meaning if you sold the 190 call, let's just say that you sold the 190 call expiring in December against your leap for $5 or $500, right? Let's say Apple is now 195 by December, and you sold the 190 call. Well, you sold the 190 call. Let me explode this real quick. You sold the 190 call, right, for $5 or $500. So if your leap gets assigned, right, you will be able to sell Apple for a sell basis of $195 a share. And remember, we bought the 110 call for it was 72, right? So our break even is 182. And you get to, if you got assigned, you get to sell Apple for 195. This means that you made $13 a share or $1,300 without even having to buy 100 shares of Apple, right? And this is assuming that you get assigned. And remember, by the time December rolls around, you've already sold calls against that leap. You've sold maybe the October call, the November call, and now you're selling the December call. So your profit might even be a lot more than this because you've already pocketed a few $100s against that leap every single month. And then by the time that you get assigned, your sell basis will actually net you, if these are the numbers here, your sell basis will actually net you $1,300. But those sold calls have the same expiration, the calls you bought? No. Robert, rewind the tape. No, I'm talking about the call that I bought was March 2024, right? This is October, November, December, etc., way before March 2024. You could sell multiple covered calls against the same leap. No, you will have to sell one covered call against one leap, right? If you have two leaps, you could sell two covered calls. But I'm saying if you sold the October one and that expired, now you can sell the November one and that expires. Now you can sell the December one and that expires, etc. Okay. Hopefully that makes sense. The downside is if the stock price drops. Yes, Chaitanya, but I already mentioned to you in the previous drawing that it is very much the same thing or very similar to buying 100 shares and paying a lot more. Your max loss is very similar. So if the price of Apple dropped to 160, for instance, by March, you would be down only $400 more on the leap. But at that point, you've already sold so many calls up until that point. So the advantage with the leap is that you can sell calls against that leap every single month. And if you get assigned, you'll be assigned in profit, right? If the stock price keeps dropping, well, you're making money by selling by selling calls against that leap, right? But the downside is if the stock price drops, that's the same downside if you own the shares. No one's guaranteeing that the stock market cannot drop, right? So hopefully that makes sense. And then, which we won't have time to talk about here, but you can roll your option. So that March 2024, if for instance you sold calls in October, you sold calls in November, you sold calls in December, you sold calls in January, you sold calls in February, you're making money off of that leap. That one leap is continuing to pay you, right? If you get to March and say Apple stock price is 160 and you're like, man, I want to keep on with this strategy, you can roll that March 2024, for instance, you can roll it to December 2024, right? And then keep doing the same thing until December. So it's not a static thing where once you lock into a leap, you have to keep it there. If you are not assigned yet on any of your sold calls, you can roll that leap forward, right? How to roll the option here. And I'm not going to get into that here for the sake of time because I have so much to get into. How far out should you buy the leap? Yes, at least 6 months. And it has to be deep in the money, at least 0.8 delta, okay? If you're assigned the call, all you have to do is sell the call. No, you would exercise your call. So you would exercise, if you're assigned, right? Like say that you're assigned on the December 195, 190 calls, right? You would exercise your March 2024 110 calls because this gives you the right to buy Apple at 110. And then those shares would be given up. So hopefully that makes sense. If you have 100 shares and then a leap as well, what will you sell if you get assigned? Well, you would sell your 100 share. It depends on how many calls you have, Thanoon. It's just basic arithmetic. If you have 100 shares and a leap, you can sell 2 calls, one against the 100 shares and one against the leap. But now you're getting into, fringe situations. Roberto says, makes sense. Zachar says, you're killing it. Appreciate you, man. Let's go down. Let's keep going down the list. Let's keep the momentum going. All right. So cash secure puts as an investment, right? We talked about poor man. By the way, this strategy is called a poor man's covered call because a regular covered call requires you to have 100 shares, but a poor man's covered call only requires you to have a leap, which as I showed you has a much less basis. So a lot of, that's definitely a hack that a lot of people don't know about. Everyone's like, oh, I have to have 100 shares. No, you don't. You have to have a leap. That's it. Cash secure put. How to use a cash secure put as an investment. Now, what is a cash secure put? As I said, I'm not going to be able to describe the entirety of the options game from the ground level. But hopefully I will be providing you some nuggets here for you to take away for free, for you to take away and trade in your personal life. So when you sell a cash secure put, right? Essentially, what are you doing? When you sell a put, you are basically telling the market that I'm selling you this put and I'm okay getting assigned the shares if the stock price is below the put price, right? I'm okay getting assigned those shares at that price. So I've been set, for those of you that are part of the Academy, you already know this, or for those of you that follow me on YouTube, you hear me talk about this all the time, but I love selling puts on Tesla. Tesla is a volatile mega cap, right? A lot of the mega caps like Microsoft, Apple, et cetera, are not very volatile. They're very good for leaps. They're very good for covered calls. They're not that great for cash secure puts because Apple doesn't pay a lot, because the more volatile a stock is, the more it will pay you, right? No leaps on margin. Yes, you can trade leaps on margin or cash accounts if you have the cash. It doesn't matter. Z, will the recording be released for free later on? Yes, you will get the recording as well as the slides, as well as the offer, which I'm going to present to you at the end of the video. So let's just say on Tesla, right now Tesla's trading at 238.59. You want to invest in Tesla. Remember, we're still talking about how to sell options from an investment standpoint. We talked about selling calls against your leaps. Now we're going to talk about cash secure puts. If you want to invest in Tesla, but you want to invest in it at a lower price than here, and you want to get paid for waiting. You know, a lot of people say, oh, I don't want to buy Tesla here. I'm going to wait till it drops. Guess what? You can get paid to wait. And a lot of people don't know about this, which is crazy because selling options is literally a cheat code, right? Stop buying options. Sell them instead. You want to buy Tesla for a much lesser price than 238. You could sell a put on Tesla. And if Tesla doesn't hit this price, right? We're going to jump into a real life example. You get to keep all of the money that you sold that put for, and you get to do it again. Let's just take an example here. Let me blow this up. So let's say that Tesla's trading at 238.59, and you either think that Tesla's going to drop, or you want a chance to buy Tesla at a cheaper price than this, right? Either you think it's overvalued, or maybe you think it's fairly valued, but you think it's going to drop more. Whatever the reason that you want to buy Tesla less than this price, right? You can go out to the 210 put, for instance, expiring October 20th of this year, right? Right now, for those of you that are Tesla fans, if I told you that I'm going to give you an opportunity to buy Tesla at 210, would you take it? If you are a Tesla investor, an eager Tesla investor, you would say, hell yeah, give me Tesla at 210 in any day. What if I told you that this is actually possible, and it's possible for you to get paid to wait? You'd say, you're crazy. How can that be? That's too good to be true. No, it's not. If you sold the 210 put on Tesla for $760, right? Because it's trading at 760. You could sell the 210 put for 760. Now, if Tesla is 210 or less by October 2023, what's 210 minus 760? Let me see if my math is correct. It's 202.40. If Tesla is 210 or less by October, you're going to get assigned 100 shares of Tesla, not at 210. Remember, we sold the 210 put for 760. So that factors into your cost basis. You get to buy 100 shares of Tesla at $202.40, right? Imagine Tesla right now is trading at 238.59. You get to buy it for 202.40 if you get assigned. Now, what happens if Tesla is not 210 or less by October 20th of this year? You get to keep this entire amount, $760, absolutely free. And then what do you get to do? You get to sell another put at a later expiration date, right? This is the beauty of selling options. And I've been selling Tesla puts since 2020. I have not been assigned one time. It's literally free money. Selling it over and over and over and over again. And I also own Tesla shares, but that doesn't matter. You don't have to own shares. You don't have to own leaps when you sell puts. You have to have the cash or the margin in order to buy 100 shares of stock, right? Now, I'm going to tell you, obviously, a lot of viewers are like, well, I don't have $23,000 if I got a sign on Tesla. That's fine. I'm using Tesla as an example. You could do this on TQQQ, which is the leveraged NASDAQ ETF, right? If you take a look at TQQQ, right now it's trading at $38. You could do this on stocks like Disney, which is trading at $83. A lot of the banks traded under $50, right? You could do this on Citibank. You could do this on Morgan Stanley, right? I think Morgan Stanley's trading at, let's see, $83, right? You could do this. Well, JPM is trading at 147, but you get the point. You could do this on Warren Buffett's favorite stock, Occidental Petroleum, which I own a lot of, $61, right? Marathon Oil Company is trading at $25. I'm using Tesla as an example. Some of you will right now at this moment have the capacity to sell puts against Tesla, but for those of you that don't, Tesla's not the only stock, right? there are an array of stocks that are great investments. And I'm not saying those stocks that I just mentioned, I'm not saying they're all great investments. Do your own research on which stocks you want to own, and then you can look into the strategy, right, of selling puts in order to get paid for a chance to buy the stock at a lesser price. Okay. Now, what happens if Tesla drops, if you sell the put and Tesla continues to drop below 210, let's say to 190? Well, what would suck more if you bought the stock at 238 and Tesla dropped to 190, in which case you would be down almost $50 a share? Or if you bought the stock at 202 and Tesla dropped to 190, in which case you'd only be down $12 a share? Which one's worse? Right? So, of course, again, the stock market is not guaranteed to go up in your favor at all times. But from an investment standpoint, you could sell cash secured puts that are very close to the current stock price and get paid for a chance to own Tesla cheaper. Now, you can also use cash secured puts to generate income as opposed to going after stock ownership. But the difference in that case is you would be selling puts much further out, meaning, you'd be selling like the 180 puts for $237, right? You'd get paid a lot less, but the chance of getting assigned is so slim, right? We use delta to determine roughly the chance of getting assigned. The delta on the 180 put expiring in October is 0.09. That means there's only a roughly 9% chance that you're going to get assigned on this. So that is the big difference between selling cash secured puts to potentially invest in a stock or selling cash secured puts as a means of income generation, right? The only difference, the mechanics are the same. The only difference is that you would be selling puts that are much further out in terms of strike price, right? So you could sell the 180 puts expiring in October, collect a few $100. Come October, you can, do the same for December, collect a few $100, and you can continue to do that. And the at worst consequence is that you get assigned Tesla. But imagine you sell the 180 put expiring in October for 237, and you actually got assigned. You'd be buying Tesla at less than $178. That is insane, right? So it's a win-win situation. Now, two caveats here. Make sure that you are only selling puts on stocks that you want to own, right? Don't sell puts on bullshit stocks. In 2020, 2021, a lot of people were selling puts on Roku and Zoom and, Teladoc and Peloton. Don't do that. Make sure that you are selling puts on stocks that you actually want to own. And secondly, you can close out your position at any time. So if you sold the 210 put on Tesla for 760, it doesn't mean that you have to wait until October to collect the money or close your position or whatever. If Tesla goes up from 238, if Tesla's now 250, you're going to be making money, and you can close out that put early. Now, you're not going to get the entire 760, but say you made a couple of $100, you can choose to close it out early. Okay. So you don't have to hold on to this until expiration. Options, American style options, very different from European style options, can be closed out at any time. So hopefully that makes sense. Tesla is awesome for selling puts, Arun says. Yes. How long is the meeting? Already answered, bro. It's supposed to be an hour, but I will promise you that I'm going to give you much, much more time. Do you sell weeklies, or how do you gauge how far to go out? You can sell weeklies. You can sell monthlies. You can sell quarterlies. It's going to be a trade-off and a personal trade-off between how much you're getting paid to sell that put and how long do you want your capital to be locked up. Now, I did some back testing, and just for your edification, selling weeklies roughly amounts as the same amount of money that you would get for selling monthlies. Okay. Now, selling quarterlies, depending, it's hard to predict quarterly stock price movements. So at times can get you paid a lot more, and at times can be roughly the same as selling weekly. So there isn't a real translation between selling weeklies and selling quarterly, right? But between selling weeklies and selling a monthly, it's roughly the same. You're just going to have to account for transaction fees, which is going to be minimal. But if you're selling a cheap stock like AT&T or one of the banks, those transaction fees have to be taken into account because, you know, if you're trading on like Thinkorswim, those transaction fees will be, I don't know, a 50 cents or $1, depending on your plan or your status with TD Ameritrade, right? On something like Robinhood, they don't have fees, but my preference, I hate Robinhood. We don't have to get into why here, but yeah, if you're trading a really cheap stock, you're going to have to take into account the fees. Can you go over how to set up stop losses for cash secured puts? No, because you don't set stop losses for cash secured puts. How much capital do you need to sell puts? Very great question. So you're going to need, if you have a cash account and not a margin account, you're going to need the amount of money required to buy 100 shares of stock if you get assigned. So if you sold the 200 put on Tesla, you're going to need $20,000 because that is the amount of money that would be required if you got assigned 100 shares of Tesla. If you have a margin account, this is a beauty of margin account, on most stocks that aren't meme stocks, so not GameStop or AMC, but if we're talking about Tesla, Apple, etc., most of the time the margin is about 20%. So they would only require 20% of the capital to buy 100 shares of stock, right? So in Tesla's case would be like $4,000 as opposed to $20,000. Okay. But again, don't hang, don't hang your head, or don't be discouraged if you're like, oh man, well, I can't sell puts on Tesla, so fuck this strategy. Excuse my French. Tesla's not the only stock. There are tons of great stocks to own, right? Again, whether you're looking at something like Disney or the bank stocks or whatever, Nike is 47% down from all-time highs. Crazy. If you think Nike's a good investment, right? Look at something like that. Again, Occidental Petroleum. Look at stocks like that. You could do it on leveraged ETFs. I would not suggest doing that too often, like SOXL, which is the leveraged ETF for the semiconductors, or TQQQ, which is the leveraged ETF for the NASDAQ. But look into it, right? You don't have to do this only on Tesla. So, and at some point, if you apply these principles and the principles that we teach in the academy, we're not going for home runs. We're going for steady income generation, responsible trading with high risk to reward. Hopefully over time, you will get your account built up over time to where you will now be able to sell puts on something like Tesla, right? And I always say this all the time, a little bit off topic, but your job is your best tool. If you are employed right now and your goal is one day to be unemployed and to be trading and making income from selling options full time, your job right now is your best tool. I know that your job is the thing, for some of you, is the thing that you're trying to get away from. But right now, having a regular income that you can use to invest, to learn how to trade, to learn how to sell options, having a regular income is what keeps you sleeping peacefully at night. If all you had was, $500 and you're like, how do I turn this into $10,000? You're probably not going to do that unless you're implementing some very risky strategies that you should not employ, right? This is not the freaking lottery. This is actually a life-changing tool that most people don't know how to leverage because this shit is not taught in schools. And I went to finance school. They didn't teach us this, right? But this is the difference between the 1% and the rest of society. They have access to the knowledge that allows them to do stuff like this. Like, How is it that you could sell a 200 put on Tesla and get paid $500 out of thin air, right? They don't teach us this stuff. But now, thanks to the internet, you get access to some of the knowledge on how the rich stay rich. Because if you have, the more money you have, the easier the shit is. Imagine you now have built up your account to $300,000. You'll probably, if you know how to do this and you do it responsibly, you'll never have to work again, right? If you're able to continuously sell puts, sell calls, sell puts, sell calls. Obviously, I'm not advocating for beginners to do this, but just imagine how the future looks once you build up your capital to that point. And now you have access to the tools that the 1% only had access to before the internet came around. So anyway, rant over. Let's get back to this. For some reason, people are annotating like crazy here. Let me remove this. Hold on a second. Clear all drawings. Okay. Cool. Guys, I know that you guys have tons and tons of questions. Unfortunately, I can't get to every question in the regular masterminds, in the personal mentorship, which we're running now as well. We go over every single person's question. I cannot possibly go over all these questions, and I apologize in advance. But you know, like I said, we're still dropping gems here. All right. We talked about poor man's cover calls. We talked about cash puts. I have a lot more to give you. Okay. Let's talk about, should we talk about day trading or no? Let's talk about hedging first. Okay. Because you've already learned about poor man's cover calls. If you own 100 shares of a stock, you can make that money work for you, right? Especially if you don't want to sell your shares because of a tax event, right? Like say you bought 100 shares of Apple today and Apple stock price went up and you're like, oh my God, I want to sell Apple because I think Apple's going to go down. But if I sell Apple, I'm going to be subject to 40% tax rate instead of, you know, a long-term capital gains tax rate, which is 15% or 20%, depending on your profile. I don't want to sell my shares, but I want to make money and hedge against my shares. Well, that's where covered calls comes in. And just in the same way that you can sell calls against your leaps, you can sell calls against your shares. For every 100 shares that you have, you could sell a covered call. So just for a quick example, if you had 100 shares of Tesla, you can go out to October. Again, this is free money. The further out you go, the more money you'll get paid. And again, it's going to be a personal trade-off for you on how much you are willing to let go of your shares, at what price, and how long you want to hold that position. So you could sell the 290 call on Tesla, right, against your 100 shares expiring in November for almost $800. And if you get assigned, right, if you get assigned, say you sell the 290 call against your shares, Tesla's currently trading at 238. 290 call against your shares. Let's just say that you sell that for $800, right? So $8 or $800. If you get assigned, you're going to give up your 100 shares of Tesla, not at 290. Remember, you collected $8. This you get to keep regardless. You collected $800. You're letting your shares of Tesla go at 298. That is your sell basis. And if your cost, even if you bought 100 shares of Tesla today, you bought them at 238 and you sold them at 298, well, you just made $60 per share, right? Or $6,000 for your 100 shares. Now, if Tesla doesn't hit what did we say? 290? Yeah. If Tesla doesn't hit 290 by November, you keep that entire amount of money. You keep $800 for free. And then you go out to December or January or February and sell more calls against your shares. This is how you make your shares work for you. Okay. Also, this can be used as a hedging tool. Like I said, if you're expecting, for instance, the price of Tesla, let's just look up Tesla's chart. If you're expecting the price of Tesla to go down, then you could sell calls against your shares. Now, Preferably, you want to do this at a time when Tesla is rallying. So one thing about calls, because calls are essentially bullish, if Tesla's price goes up, the more expensive these calls will be, right? So you can certainly do it now, for instance, and sell the 290 calls against your shares, or you can wait for Tesla to go up and then sell calls on a rally, right? So on a decline, calls are going to be, you're going to get less money for selling those calls. On a rally, you're going to get more money for selling those calls. All right. So let's jump to vertical spreads. Okay. I don't know how many of you guys know what vertical spreads are, but it's important to understand what vertical spreads are. I got options. Why are you typing in all caps? Mark, thanks for your times a year ago. Appreciate you. Kaylin says, thank you for this. Really amazing. Thank you. So if you sell the 290 call, you get what you paid plus some. Well, if you get assigned the 290 call, then you get to sell it for 290 plus what you got paid. If you don't get assigned, meaning if Tesla's not 290, then you just get to keep $800 and you get to sell it again. All right. Why are we talking about vertical spread? Some of you on the call may know what a vertical spread is. Wow, there's 400 of you on here. That's amazing. Some of you may know what a vertical spread is. Some of you may not. It's important, very important to know what a vertical spread is for a few different option selling strategies. We use it in day trading, and we also use it in hedging, and we also use it in swing trading. And we also use it in income generation. So vertical spreads is one of the most powerful options tools for that entire array of option selling strategies. Also, vertical spreads are a great way, a great entry-level way, if you don't have enough money to sell cash secure puts or to well, it wouldn't be calls because calls would be covered either by your leaps or by your shares. You're not going to sell calls naked. But say you don't have, you don't have shares and you don't have leaps, but you still want to make money on setting a ceiling for a stock, meaning that you don't think a stock is going to go up further in the short term. So vertical spreads are a very important strategy. Right, it's a very, very, very important strategy to use for that array, for that array of option selling strategies. Lalo says you're amazing. Appreciate you, Lalo. Thank you so much. Learn all this the hard way. Guess what, Mark? I learned it the hard way. And if I had access to this or something like the Academy, when I started trading derivatives seriously back in 2009, 2010. I would have shortened the time that it took to learn, right? I believe there are no shortcuts, meaning you have to put in the hard work. You have to chart every day. You have to practice. You have to paper trade. You have to start with a small position size. You have to get used to this stuff, right? You have to get your reps in. But I do think that you can shorten the time it takes to learn, right? And also a lot of the pain that comes with learning, right? So my first year trading options, I took a gut punch and I lost almost a third of my entire yearly salary in one trade. And this is when I was still working. And I felt like I was going to throw up for the rest of the day. Right. But I agree with you. A lot of people learn the hard way, and I'm now here to hopefully prevent some of those types of gut punches. So let's learn about vertical spreads. Right. And again, you can take what I'm giving you here and do your own searches later. You can join the Academy for a much easier way of learning, right? Learning from thousands of traders who have already done this, where we do support beginner traders and we have a beginner trader section. But I'm not going to be able to get into this from the absolute ground level, okay? So apologies in advance, but I'm trying to give you as much as possible in the short amount of time. What is a vertical spread? So a vertical spread is basically made up of two option legs, right? And you're going to be buying an option and selling an option. Now, this works on the call side. This also works on the put side, okay? So let's say that you are bearish on Tesla, right? You don't have 100 shares. You don't have enough money to buy leaps, but you are bearish on Tesla. You think Tesla has hit a ceiling, and you want to be able to bet. In this case, this would be like a swing trading strategy, right? You want to bet that in the coming weeks, Tesla is going to be less than, say, 250 bucks. Okay. But again, you don't have 100 shares and you don't have leaps, but you want to make this bet, right? The Tesla is going to be less than 250 bucks. Now, remember, I told you that when you buy options, over 85% of options expire worthless. So let's say that you bought a put on Tesla, right? One, they're hella expensive. So let's say that you bought the 220 put on Tesla and you bought that for $1,000 or $10. If Tesla never goes down, you're going to be down heavily, right, on that put. You're also subject to time decay. Remember that options are time decaying instruments, both calls and puts, right? And if you look at the, if you buy this and you look at the theta for this Tesla option, so if we analyze this in Thinkorswim, and by the way, you do have access to this in Robinhood and every other platform for the most part. I trade on Thinkorswim. But if you look at the theta, this option here is going to lose $16 a day by default. Whether the price of Tesla goes up or down, by the way, it's going to lose $16 a day. They are time decaying instruments, right? The option seller, by the way, the person who sold you this, is making $16 a day off of you, okay? This is why we want to always be, or most of the time, be option sellers. If you bought this, you're going to be losing $16 a day. And worse off, if you're wrong, meaning if Tesla's stock price never goes down and it goes up, you're going to be losing even more. If Tesla trades sideways, you will still lose money every day. That's insane, right? So say you bought that 220 put and Tesla just does this until October, right? You will lose money every single day. So how do you bet? How do you make a bearish bet against Tesla, but you don't get killed for buying the put? Well, you could sell what is called a short call vertical spread, or a bear call spread, or a bear credit spread. It doesn't matter what you call it. The mechanics are the same, okay? Instead of buying a put, what you're going to be doing is you're going to be selling the 250 call and you're going to be buying the 255 call, okay? And notice the credit that you receive for this, because this is a selling strategy. I'm going to explain this to you in a second. Let's just round it up to $2 instead of $1.97, okay? So you're going to be selling the 255 call and you're going to be buying, the 250 call, right? And you're going to be buying the 255. So sell the 250 call and you're going to be buying the 255 call. Why do we do this? Well, you do this because, one, it's very cheap to do it. Two, it limits your risk, okay? So if you sold the 250 call just naked, which you wouldn't be able to do unless you had a really, really big account. But if you sold the 250 call just naked, forget the 255 call for now. If you sold the 250 call just naked and Tesla went up to 290, well, you're down $4,000, right? Because 290 minus 250 is 40 times 100 is 4,000. So obviously you're going to need a lot of money and margin to sell a naked call, and we're not going to do that. We never sell naked calls. You're always going to sell calls against your shares or against your leaps. But in this case, you are limiting your risk, right, for taking the short bet. Because if you sold the 250 call and Tesla goes to 260, well, you bought the 255 call, meaning you have the right to buy Tesla at 255, right? So your losses are capped, even if Tesla goes to 5 million. you still have the right to buy Tesla at 255, right? So the max that the spread can be worth is $5. Okay? Because you essentially are shorting Tesla at 250 by selling the 250 call, but you have the right to buy it in case it shoots up at 255. So the max of this spread, this is called a vertical spread, is $5. Okay? It's the difference between the strikes. But we sold this spread for what? A credit of $2. We collected a credit of $2. Okay? So what happens if Tesla is below 250, right? Let's say that Tesla meanders sideways or Tesla drops a little. If Tesla is below 250, we get to keep $200 because we sold this for $2, right? And this is why I said here, you don't have to be 100% accurate because Tesla can be 249.99. It doesn't matter. Tesla could be 230. Tesla could be 250, 245. Tesla could be 249. It doesn't matter. As long as it's a penny below this, you keep the entire $200. You keep this entire amount. This is the power of selling strategies, right? Now, what is the worst case scenario? Say Tesla goes up to 300. Are you going to be down a shitload of money? No. Remember, the max that this can be worth, this vertical spread, is $5. We already collected $2 for it, right? So the max that you can lose is $3 or $300. This is why vertical spreads, if you don't have the money for calls, you don't have the money for cash your puts, vertical spreads are a great entryway into making swing bets against a stock. You can also use this for day trading, which I'll talk about in a second. But your max loss is only $300, and your max gain is you get to keep this, right? Is $200 if Tesla expires below 250. If it expires above 255, you lose $300. That's it per contract. So hopefully that makes sense, right? And the amount of money required to do this is only the cost of the entire spread. So as opposed to needing, for instance, 100, the equivalent of 100 shares of that stock for a put, or selling a call, which can be hella expensive, or buying a leap and selling a call, which can be hella expensive. All you need is $500 per contract for a $5 wide spread. Now you can do, on some stocks, you could do $1 wide spreads, right? Depending on the stock. So if you look at a stock like, Amazon is not a good example. What is a stock with $1 spreads? Let me see. Not Google, maybe Disney. Yeah. On the shorter dated expirations, you can see here that Disney's strike prices are $1 apart. So even if $500 is too much, you could practice this with cheaper stocks that have $1 wide spreads. And instead of $100 in between, instead of $500, because this is a $5 wide spread, if it is a $1 wide spread, like you sell the 85 call and buy the 86 call on Disney, it's going to be $100 wide spread. So all you'll need is $100 to do this, right? Now you can also do this on the put side, which works exactly the same. So instead of setting a ceiling for a stock, you set a floor. So if you say, for instance, I don't think Tesla is going to go below 230, right? And I want to make a bet, a cheap bet with a defined risk. I want to make a cheap bet that Tesla is not going to go below 230. Well, in the same way, you can buy the 225 put and you could sell the 230 put, and you'll collect $2 for this. Remember, this is a $5 wide spread, right? So the max loss is 5 minus 2, which is $300. If Tesla doesn't go below 230, you get to keep $200. That's it. Again, you don't have to be 100% accurate. It could be any price above 230. It could be a penny above 230, and you keep $200. So as opposed to buying puts or buying calls where you're now subject to a lot of theta decay. You're subject to IV crush, which is implied volatility, which we're not going to get into in detail on this call. Like I said, we'll need a much longer call. You could sell credit spreads. You could sell call credit spreads, which are basically setting a ceiling on the stock, or you could sell put credit spreads, which are basically setting a floor on the stock. I'm 2K from an account blow up. I need help. I mean, hopefully this helps you, but you will definitely need a job in order to keep bringing in income. If you have just $2,000, for instance, and you're trying to turn that into a life-changing amount of money, I'm telling you right now, that's not going to work. Okay. I'm sorry to burst your bubble. Unless you're doing something really risky and you're like, I'm going to YOLO these 2,000 and buy SPX calls and then double that and then buy more calls and then double that. You're going to blow up an account doing that. Then that's not real trading. That's just gambling, right? And you can certainly use the market to gamble if you want, or you could be responsible and unlock these strategies that were once only known to a select few, and do it slowly over time. The market's here every day. You don't have to turn 2,000 into 1 million, okay? That's not going to happen. As a matter of fact, I'll bet you $1 million that that's not going to happen. All right? But like I said before, your job is going to be one of your greatest assets, because if you're just worried about the small amount of money, you are going to be doing some dumb shit in order to try to exponentially gain that, right? And say that a trade doesn't work out, and now you take that 2,000 to 1,000, and you're not planning on bringing in any more income, then that fear is going to kick in, and now you're going to start trading like an idiot, right? So trying to turn a small amount of money into a large amount of money, one, enforces really bad gambling habits, and two, introduces a lot of fear if that account balance now has dwindled and you don't plan on replenishing it. So with all due respect, if that's the position you're in, trading is not for you right now, right? Until you can accept that responsible trading is actually building an account slowly over time, and there are risk-defined strategies, there are selling strategies that you can employ in order to do that, and you plan on using your job as your crutch, then trading is for you. But if you're like, I have $500 and I'm trying to triple, quadruple that and become a millionaire, that's not going to happen. No, Rohan, you don't need 100 shares. That's the beauty of vertical spreads. And that's why I said it's great for people who are just starting out. So hopefully that makes sense. All right. So now that we know about vertical spreads, how do we day trade using selling strategies? Okay. Caveat one when it comes to day trading. Napoleon, I can't go over liquidity grabs and fair value gaps and all that. The call is just not long enough. But this is something that we do in the regular mastermind. And we do this every day in the academy. It's something that we talk about every single day, right? But I can't go over, I can't simply go over this on the call, so I apologize. I will get into a little bit of liquidity because it does, day trading entails that, but I can't get into it in complete detail. Requires day trading options, right? Requires decent knowledge of supply and demand. When you're day trading options, okay, one, you're not going to be selling calls or selling puts naked. You're just not, okay? When you're day trading options, you are going and you want to employ selling strategies. Remember, we're not talking about futures. We're not talking about buying strategies here. This mastermind, I want to focus on selling. When you're day trading options, you're going to be selling spreads, what we just talked about, vertical spreads, okay? And if you don't know how to read supply and demand or liquidity, you're going to need to do this first, okay? So I'm going to go over a rudimentary example. Let's just say that right here, you identify a demand zone for Tesla, right? And we're on the 5-minute chart, and let's just say the market is active because right now the market is closed. And you wanted to make money off of declaring that this is the daily ceiling for Tesla. Well, you would go to the option that expires the soonest, right? Which in this case would be September 1st as of the time of this recording. And you would set a ceiling at this supply level. Again, this is a very basic example. We're not getting into, a full discussion about how to determine liquidity. But right now, this price right here is below 239 for Tesla. So if you wanted to day trade, and in your mind, Tesla took liquidity at this demand level and now is going to go for the other liquidity level that you see here, which is at 228. Remember, for those of you that are part of the academy or have watched me on YouTube or have live traded with us on YouTube, you know that the market is just a series of taking liquidities, right? It takes liquidity from the buy side, comes down to the sell side, goes up to the buy side. This is why on a daily basis, the stock market doesn't trade like this. This is why if you look at a 5-minute or 1-minute chart, every day stocks are doing this, right? Institutions and banks are taking liquidity. That's why it trades like that. So if you determine that this is the ceiling for Tesla and now it's going to go take liquidity from the other side, well, you can go to the soonest expiration and you could sell a call spread as a day trade, right? So in this case, we could sell the 237.5, 240 call spread, as you see here. This is a vertical spread, and you're selling it for $122 or $1.22. Now, in the last example, we went over a call spread that was $5 wide. In this case, this is 237.5, 240, right? This call spread is $2.50 wide because the difference between 237.50 and 240 is $2.50, right? We're selling it for $1.22. So we're selling this for $1.22 credit, right? Which means that we get to keep the max loss is $1.28. So we sold it for $1.22 credit. If Tesla goes above 240 and the day the option expires, then we lose $1.28. So this is roughly a 50-50 bet. Okay. If Tesla's below 240, if you're right in declaring for the day that this is the ceiling for Tesla and it actually drops, you get to keep $1.22 credit. Now, thanks so much for this. Look forward to recording. Must go. Brain can't do anymore. Yeah, I know. I'm trying to jam pack this for you, and so you can watch the recording, on your own time and your own speed, etc. But it is a lot. It definitely is a lot. But I guarantee you, these are the tools that will unlock a whole new paradigm for you as it relates to the market. Now, as I said in here in the slides, right, can be done on equities, meaning on individual stocks like Tesla, but more effective on indices. This is for two reasons. One, SPX options, which are the S&P 500, have a tax advantage. So for some reason, SPX options, the way that the tax code is written, it's taxed at a 60-40 tax advantage, meaning only 40% is taxed at short-term capital gains. 60% is taxed as long-term gains, even if it's a day trade, right? Even if it's a day trade. And two, index options like SPX have daily expirations. So in this Tesla example, this option doesn't expire at the end of the day, even though you will make money if Tesla does drop, right? You're not going to get the full credit unless you are near expiration. So if you did this on a Monday, tomorrow, for the option that expires September 1st, you're not going to get the full credit because you still have days left until the option expires, right? Whereas SPX, If you did this on SPX options, SPX has options that expire every day. So on that drop, for instance, that example that I brought up with Tesla, on that drop, you would get most of the credit, if not all, right? And by the end of the day, if it's below your ceiling that you set, right, and the day ended 4 p.m. Eastern, then you would retain that entire credit, right? If it's below the ceiling that you set. And also, in my view, index options have a lot cleaner moves intraday, right? Whereas sometimes if you look intraday at a stock, you tend to see moves like this, right? Where it's just trading in an ugly range. When it comes to indices, you do get these broader moves, right? Yes, Kaylin. 1.22 means $122. Yes. So that's how you'd utilize day trading, selling strategies with regards to day trading, is you would be doing it through vertical spreads. You would have to have a knowledge of liquidity, right? Knowing or supply demand, right? Knowing how to identify ceilings and tops, which is actually pretty easy to do. You guys have seen me do it on live streams. Go back and watch my last live stream from Friday where we live streamed Jackson Hole. I did it twice on 2 live trades, right? It's very easy. All you have to have is the knowledge of horizontal lines, right? But again, I'm not going to go in. I'm not going to go in and describe liquidity and fair value gaps and all that stuff in detail here because I just don't have time. Would you recommend leaps on indexes? Gabe, that's for you to answer, not for me. Right? If you want to own the indexes, then yes, you can use a stock market, a stock replacement strategy on the SPY or the QQQ. If you don't want to own the indexes, then don't. So vertical calls are for ceilings, vertical puts are for floors. Yes, exactly. Napoleon says, appreciate you. Appreciate you, man. All right. So that's how you would utilize selling strategies in terms of day trading. In terms of hedging, we talked about, if you own 100 shares, then you can sell calls against your shares. The strike price is going to be determined by the stock price at which you're comfortable selling shares. So if you had 100 shares of Tesla, again, for instance, and you wanted to sell calls against those shares, you have to contend with what happens if you get assigned. Are you okay? Like, say you sold the 300 calls. Are you okay selling Tesla, your Tesla shares at 300 if you get assigned? That's how you're going to determine your strike price. Okay? If the answer is no, don't sell that call. Sell a call at a strike price that you are comfortable selling your shares at. And in terms of hedging, like I said, you can also use vertical spreads as opposed to just buying puts. So if you have a bearish bet, we actually just did this, by the way. We did this on Meta, right? Here you can see I said buying the 275, 270 put spread on Meta. So instead of just buying a flat out put, I bought a put spread, which you can sell a call spread or buy a put spread. They're both bearish strategies. I don't want to get into that here. The point is you can use vertical spreads if you have a hedge, or say you had Meta shares and instead of buying puts, you can sell call spreads as opposed to just buying naked puts. Now, this also works. Say you have Meta shares, but you don't have 100, right? You can't sell a call against your shares if you don't have 100 shares. So in essence, you would be selling the call spread. You don't have to have 100 shares to sell the call spread. You can hedge using vertical spreads. All right. And then swing trading, we talked about vertical spreads ad nauseum insofar as the time that we have. The last thing I want to talk about is neutral strategies, and then I will get into the huge announcement at the end. Selling cash secured is easy on bull market. Yes, I agree with you. Is this a bull market? Yes, John, this is a bull market. Neutral strategies such as iron condors, right? We did this recently on NVIDIA, made 80%. We also did this on Meta and AMD earnings. An iron condor is basically made up of a short call spread and a short put spread. But why would you do this? Essentially, you're doing this because you are setting a range. So as opposed to setting a ceiling, right? In the form of short call spreads, or a floor in the form of short put spreads, you can set a range and make even more money. And if NVIDIA stays in that range, you keep 100% of those profits. And we did this on Meta earnings, on NVIDIA earnings, and on AMD earnings, right? Now, the reason that I did that, this is going to be a little bit more complicated, but it's because I know that NVIDIA on earnings doesn't usually meet the expected move. The expected move means the expected move plus or minus that NVIDIA is expected to do after earnings, right? It says the options market overestimated NVIDIA's earnings move by 69% of the time. So almost 70% of the time on earnings, NVIDIA doesn't actually make the expected move, meaning the large move that's expected either up or the large move that's expected down. So if I know that, and I know that NVIDIA is paying high premiums because implied volatility is so high, I could set a range. And in my perspective, I'm betting that NVIDIA doesn't make the expected move and stays within this range. And if it does, by expiration, I keep 100% of the credit. This is an amazing strategy. In what other market can you say, I'm not going to take a bullish bet, I'm not going to take a bearish bet, I'm just going to bet in a range, and I don't even have to be that right. It can go up, it can go down. As long as it stays in that range, I get to keep 100% of that credit, right? Now, you guys learned that a short call spread sets a ceiling, right? Call spread. And a short put spread sets a floor. So an iron condor is really just the combination of these two things. You have a short call spread on the upper band and a short put spread on the lower band. And once you open that, if the stock price stays in between, at expiration, you'll get 100%. The beauty is, before expiration, every single day, because this is a selling strategy, you're getting paid time decay. So when you buy options, remember that time decay goes against you. In this case, because you are in a selling strategy, you get paid every single day just for holding this position, as long as the stock price is in between, right? So I'm going to go a very quick example of how to set an iron condor, and then I will wrap up with taking questions. And I'm going to be doing a huge announcement that you definitely want to stick around for, and I'm going to give you a huge offer as well. So in this case, if I say that I think that Tesla is going to be between 290 on the upper band and between 215 on the lower end, right? Again, it's just a short put spread to set the floor, right? So I'll be selling the 215, buying the 210. And what did I say on the upper end? 290. So I'll be selling the 290 call, buying the 295. And now we have an iron condor, right? Something that was so complicated to a lot of you. Now we've simplified the crap out of it. And we're collecting $2.05 or $205 to sell this. I'm going to go over what the max loss is in a second. Here's how the profile looks. Here's how the profile looks. If Tesla is anywhere in this range, 215 to 290, I get paid $205, right? On 10 contracts, you can see here, that's $2,050. This is why selling strategies are so powerful. And I'm getting paid $17 a day just for holding this, right? So this right here we're getting paid 205, right? What is the max loss? Well, this is only a $5 wide spread, even though we have two of them, right? We have a short put spread on this side and a short call spread on this side, and we want the stock price to stay in between. It is still considered a $5 wide spread. And it's considered a $5 wide spread because the fact that both spreads can't be losing, right? So it's not a $10 wide spread because you have two of them. If Tesla, say for instance, blew past this short put spread is going to be winning, right? If Tesla blew past this and went below 215, this call spread is going to be winning. So the max loss is not $10. The max loss is still $5 because it's a $5 wide spread on each side. 290, 295 on this side, 215, 210 on this side, right? And we got paid 205 for it. So our max loss is going to be, just like in previous examples, $5 minus what we got paid, 205. So our max loss is $295 or $295 per contract. And the max loss happens if by expiration Tesla is below 215 or above 290. Anything in between, we bank. You don't even have to be that right. So we use this on earnings all the time because if on earnings, we know, for instance, through our data and our analysis, that something like NVIDIA, the expected move is overestimated 70% of the time. Well, then we know that, hey, most of the time we're probably right if we sell an iron condor. And that's what we did. And again, you can close these positions out early. We made 80%. If we held it until expiration, we would have made 100%, meaning we keep 100% of the credit. But in this case, we closed it out the day after and didn't even wait until Friday because the difference between 80% and 100% is not that much for me to hold on to these for risk, for that added risk, right? So hopefully that makes sense. And yes, you could do this in Robinhood or whatever. My brain can't comprehend options trading. As I said, you're not going to learn it from one session. But I guarantee you, if you really wanted to make money, Summerski, you will be motivated to learn it. If you don't want to make money and you don't want income generation, you don't even need a side hustle. Option selling is your side hustle, right? Then you will learn it. I promise you will learn it. Who doesn't want to make, what other industry can you, and I'm sorry, I'm passionate about this, but for real, what other industry can you click around buttons and make money? For real. What industry can you do that? Just click buttons and make money. Set ceilings for stock prices and make money. Sell calls against your leaps and make money. What other industry can you do that? You can't. Side hustles take a shitload of work, and I respect every side hustle. And I had tons of side hustles, right? Growing up. But until I found this is the only side hustle you will need if you get proficient at it and you are dedicated. I promise you. I promise you. Options traders are very complicated to comprehend, but once it clicks, you're done. Exactly. And also, we do this every single day in here. So you will get exposed to it every single day, right? I'm going to be, some of you are asking for futures trading. But I know that a lot of you are pressed for time. So, Z, I have been with your Discord since you started. Honestly, you are the one who I learned most from, and you're truly the best. I appreciate you, Dr. L. Thank you so much. I'm going to be giving you the offer now, and then I will jump into futures trading. So for those of you that want to stick around to futures trading, make sure that you stick around. I'm giving you a ton of extra free time. This meeting was supposed to be done 25 minutes ago, okay? I'm going to give you the offer now. This is the lowest ticket entry to the academy. Okay, we open up monthlies because we understand that times could be tough. People were asking for cheaper membership entries, right? And we are an expensive group by nature because you know, I believe that we are the best group around We tried to limit the number of people that joined, but a lot of people wanted to learn and were asking about monthlies. So we are handing out. Why can't I? Hold on. Here we go. So if you wanted the cheapest ticket entry to the academy, right? You don't get access to the mastermind calls like this, which I do have another announcement. Here's a sneak peek. Mastermind 2.0 is coming. We are relaunching our mastermind program. It's going to be extremely immersive. It's not just one call a month. I will talk about that in a second. But if you want the cheapest level entry into the Discord, where you get access to all the chats, all of the alerts, all of the analysis, you still get access to the beginner section. There is 27% off that you'll be able to use just as by virtue of joining this call. Use that code right there at checkout. Use code MM27OFF and use that link that I just put in there. I just pasted it in the chat, right? Here's the code. It's MM27 off. Use that code at checkout. That is the cheapest way to enter. Now, if you wanted to be a part of the revolutionary overhaul of the mastermind program, where we are going to be going through options trading, multiple sessions of what I did here, futures trading, technical analysis, where I will go over liquidity, supply and demand, fair value gaps, how to enter trades, what makes an A+ setup, risk management, right? How to figure out what your R profit level is, right? What your R number is, how to routinely track your profit. If you want to be a part of that, which is going to be a shorter version of this, right? It's going to be every mastermind is going to be 4 weeks, 2 classes a week. We're going to be going over technical analysis, trading, options, and futures. Then you want to let me put that up for you. 1 second. Yeah. I have a wait list for you. 1 second. And then I'm going to dive into futures, I bet. I promise you. If you are interested in being on the wait list for the next mastermind, then you have to apply using that link. Okay? You have to apply using that link for the mastermind. Please, Brownie, don't ask questions about all that. Just if you get a response back that you were approved, then you'll be talking to one of our ambassadors and they'll walk you through the entire process. But we're taking now waitlist signups for Mastermind 2.0. This is a complete overhaul of our Mastermind program. Now, Mastermind students will get access to all Mastermind recordings, previous, and they can join any Mastermind they want in the future. They can drop in if they need to brush up on technical analysis, options, futures, etc. But we literally have tons and tons of recordings from previous Masterminds that you will also get full access to for the rest of your life. You also get lifetime Discord access, right? If you are a Mastermind student. So again, the cheapest option for entry is the link that I posted before with the code MM27OFF. If you want the trade alerts, the chat, all that stuff. If you want to be in the Mastermind program where you get lifetime access to the Mastermind, you get lifetime access to all future Masterminds and all previous Mastermind recordings and the courses, the options course, the day trading course, etc. Make sure that you sign up on this Mastermind waitlist here. We will not approve everybody. It's going to be based on how you answer this, right? And if you are not approved, I would suggest joining the monthly, getting your feet wet. If you are approved, you will get a notification right away. Okay. And now I'm going to go over futures. Yes, if you are a Lifetime Academy member, you already got this, Mike. Yes. If you are already a Lifetime Academy member, right? Like you see here, then yes, you already get this. You don't sign up again. Are you going to go over collecting interest on sold put premiums? Yes. What are your favorite 3 option strategies? Bro, this isn't Sesame Street. There's no like favorite. It depends on what you're going after. And I was just kidding about the Sesame Street thing, but there isn't like, oh, what are your 3 favorite colors or your 3 favorite ice cream flavors? It really depends on the context. Do you own shares? Do you have leaps? Do you want to buy Tesla but at a cheaper price, for instance? In that case, you do cash secure puts. Are you hedging? In which case you can either sell calls or sell short calls. It really depends on the situation. There are no 3 favorite ones, right? It depends on what you're going after. The good news, though, I got options, is that there is a strategy for every single situation. There's a strategy for every single one. Mastermind 2.0, would this be for the extreme beginner options trader? Yes, it will be, but I urge you to fill out that application. It will give you more context. But for sure, the Discord itself, we have extreme beginners and we also have experienced traders. And the beauty is the extreme traders teach the beginners. Totally missed the Zoom. So it's either Mastermind or monthlies. If you do the monthly, then you get access to the Discord and the chat and the alerts and the beginner section and the bots, etc. But you won't get access to the Mastermind. If you are a Mastermind student, you'll get lifetime access, not only to the Masterminds, but to the Discord itself. If you purchase the options course just solely, no, you won't be part of the Mastermind program. Okay. Link to Discord. I posted it already. And make sure you use the code MM27 off. The link to the Discord is this. Make sure you sign up today before it expires. Before the code expires. That's the link to the Discord. The only way to trade is with the options? No, dude. We trade futures, we trade stocks. I'm just going over option selling strategies here, okay? Now we're going to jump into futures. So for those of you that want to learn futures, stick around. Futures are so much better for beginners, in my opinion. Much simpler concept. It's not better, bro, because with futures, you cannot trade neutral strategies. Tell me, Anthony, how to trade a neutral strategy with futures. You have to guess direction. There is no better. They're different and they're used for different things. But yes, if you're talking about buying options, like trying to day trade by buying naked options, yes, I agree with you. But tell me how to hedge by selling calls against your shares with futures. What is the equivalent of that? Where you don't have to be right. You just have to be below the price, for instance. What about your courses? If you're a Mastermind student, Daniel, you'll get access to the courses. What sections do we get access to in the Discord monthly? You get access to everything except for the Mastermind and the courses. You'll get access to the chat, the alerts, etc. Right? But you're not going to get access to the Mastermind courses. But you could choose to upgrade later, by the way. It's not a end all be all. Is Mastermind different than Lifetime? If you're already a Lifetime, you are a Mastermind student. So no. What platform do you recommend? TD Ameritrade. You can't trade futures on Fidelity. You can't trade futures on Robinhood. You can't trade futures on Webull. But if you're out of the US, you could trade on Interactive Brokers, which is amazing. You don't, Schwab doesn't matter, Chaitanya. We're using Thinkorswim. Schwab is not touching Thinkorswim. Will you share your workspace template for Thinkorswim? Yes, I have it here in the Discord. Where is it? And then I'm going to go over futures right now. I can't find it in the Discord. It's in the Discord, but I don't want to spend too much time going over it. Upgrade trade. Oh, right here. Here's my toss template in the Discord. Go under tools promotions and you'll find it there. Can you trade futures on E-Trade? Yes, Janet, you can. What about IBKR? Yes. Do you recommend options on futures on toss? No, I don't trade options on futures, but options or futures, yes. All right. Let's go over futures trading real quick. Again, for those of you that want to stick around, I would love that. For those of you that don't, you can watch it on the recording, but make sure that you use that code by today. And if you want to get on the Mastermind waitlist, make sure you get on that, okay? No, for the millionth time, Brownie, if you're a lifetime member, you get access to the Mastermind, okay? For the millionth, billionth time, you're good. If you are already a lifetime member, you're good. Don't apply again. All right. What are futures? So futures, the funny thing is, I think options are way more complicated than futures, right? We just talked about vertical spreads and iron condors and leaps and poor man's covered calls and cash secure puts. Futures are so damn easy because here is the deal. You can only buy a futures contract or you could sell a futures contract. That's it. It's exactly like a stock. So people think of the word futures and they're like, oh my God, this is so complicated. Let me just shut my laptop off and never look at this again. No, you can buy a futures contract or you can sell a future. That's it. It's that easy. It is that easy. Okay. So you can either go long or go short. Now, what are futures? Futures were started by farmers that were speculating on crop prices. So if I thought that I would have less crops of corn today, then I might sell a future price to someone on my bushels of corn. Say that my bushels of corn are usually $50 per bushel. I might tell somebody, hey, I'm expecting less crops. If you want to lock in a price at $50 for next November, because I'm expecting less crops due to bad weather, lock in that $50 price now. That's how futures were started. Of course, Wall Street is going to be Wall Street, and they found this and we're like, oh my God, we can use this for everything. So there's literally a futures contract for indices. There's a futures contract for gold. There's a futures contract for oil. There's a futures contract for everything. Here you can see them in TD Ameritrade. Stock indexes, metals, energy, agriculture, currency, interest rates, crypto even, right? But there's literally a futures contract for everything. And now it is just a way to speculate on prices, okay? That's it. Most futures are cash settled, meaning that if you're holding a futures contract by expiry, the broker will close your position. And if you're in a winning trade, give you the money. If you're in a losing trade, take money from you, okay? You can only buy or sell futures. There's no complicated strategies like options. And unlike options, they expire once a quarter. They don't expire weekly or daily. Okay. So when you look at in Thinkorswim, if you look at ES futures, right, which are the S&P 500 futures, you will see the expiration dates here. September, December, March, June, and then next September, right? Every quarter they expire. And it tells you the days to expiration here, right? Now, you don't need, especially if you're day trading or swing trading, you don't need to even bother with expiration date. So even more convenient than options, where you have to pick your expiration date and strike price. With futures, you are most likely going to be trading whatever the current contract is. There's no reason to trade future contracts, right? Look at the volume on the current contract, 1.8 million contracts traded on Friday. On the December contract, it's 8,000. On the March 2024 contracts, 465. On the June contract, it's 3, right? Point is, you don't even have to deal with expiration date. You're going to be trading the current expiration until that expiration date arrives, right? Like in this one is 19 days. Then it'll switch to the next contract. The broker will automatically make that switch. So you don't even have to bother with expiration, okay? Now, the benefits of trading futures, they trade 23 hours a day, 6 days a week. They are also traded at a 60-40 tax advantage. This means that just like SPX options, only 40% is considered long-term. 60% is considered, only 40% is considered short-term. 60% is considered long-term, even if you're day trading them. There's absolute pricing, meaning the price that you see is the price that you get, unlike with options, naked options, right? Where you are subject to Greeks, meaning time decay, implied volatility. You guys have all been there where, you might be day trading an option on, I don't know, let's just say Apple, and the price starts, say you buy a call option and starts moving in your direction, and then you get this big pullback here. This big pullback can actually put you in the negative because of irregular options pricing. Whereas on futures, it's absolute pricing. This price, the price that you see, is the price that you get. So if it goes up by a point and it goes down by a point, you're at break even. There is no irregular pricing. Okay. Easier risk management. For that reason, it's easier risk management, right? To the dollar, as opposed to options where you can't really use stop limits precisely, right? And there's no PDT rule, which a lot of people are surprised to find out. There's no pattern day trading rule. So you don't have to have 25,000 in your account to day trade like you do with options. With futures, you can enter a billion zillion trades if you have less than 25,000, right? Those are the benefits. And if you are not in the US, you can trade on interactive brokers. Okay? For those of you that are asking. Yes, you will get a recording of this in your email. All right. Our futures trade 6 p.m. Eastern to 5 p.m. Eastern, Sunday to Friday. That means that as of right now, the time of this recording, futures are going to open up in 4 hours, right? They take a 1 hour break between 5 p.m. and 6 p.m. Eastern every day. Most volume occurs in Asia, London, and New York session, right? Which is awesome. Because you have multiple time zones that you can trade in. As a matter of fact, when I'm traveling in Europe, I usually trade the London session, right? Because you see a lot of volume in London. Here are the hours. Asia hours are 8 p.m. to 2 a.m. Eastern. London hours are 3 a.m. to 11:30 a.m. Eastern. And London hours and New York hours overlap by a couple of hours, which that is why I love trading futures between 9:30 a.m. and 11:30 a.m. Eastern, because London and New York are overlapping. And so that surge in volume gives you nice, big, clean moves and allows you to make more money usually, right? And then by 12 p.m. to 1 p.m. Eastern, where it's New York lunch, you tend to see a slowdown in price. So when you are trading futures, how do you determine how much money are you making or losing? Well, if you look at the price of S&P 500 futures, for instance, which most likely you're going to either be trading S&P futures or NASDAQ futures. We're not going to even bother with the other crap that has low volume, right? You're not going to be dealing in pork belly futures and orange juice futures. We're not even going to look at that, okay? Once in a blue moon, if you are very good at geopolitical affairs, you could trade things like oil futures, which I do from time to time. But my mainstay is S&P and NASDAQ, okay? But when you look at NASDAQ futures, or sorry, S&P futures, you'll see that it's priced at, for instance, right now, 44.1425. Well, what does that mean? Does that mean that when you buy an S&P contract, it's going to cost you 4,414.25? No. Does that mean that if this goes up $1 to 4,415.25, you make $1? No. This is where we have to introduce something called multiplier. Okay? This is very important. For the S&P 500 futures, ES, which we are looking at now, the multiplier is $50, which means that for every point, for every 1 full point, the S&P goes up or down, you make or lose $50. Okay? So if the S&P goes from 44.1325 to 44.1425, for one contract you make $50. If it goes from 44.1325 to 44.1225, you lose $50. This makes it so easy when you're doing risk management and say you want to go long, right? When you are setting your stop limit and your take profit, it's very easy to know exactly how much you will make or lose. You cannot do this with options, okay? You simply can't, unless you do only selling strategies where you can determine what your max loss or max profit is until expiration. But when you're day trading, you simply cannot do this with options. You can do this with futures. I could tell you right now exactly the price can go like this. And I could tell you, if you say, stop right there, how much money did you make or how much money did you lose? I could tell you to the penny. You cannot do that with options, right? If you're looking at like Microsoft options, right? And you bought the 340 call and the price did this and did this. And I said, how much money did you make or lose right there? You are not going to be able to tell. It's impossible. There's no way to do it. That's why risk management is so good when trading futures. So in this case, if I set my buy at 44.1325, my stop limit is 44.0925. So 4 points less. My take profit is 44.2725, right? Which means that is 14 points more, right? How much do I stand to make if my take profit is hit? And by the way, I don't have time to tell you exactly how to determine your take profit and your stop limit and how to find a perfect trade and how you guys see me all the time calling out the tops or the bottoms in markets on live trading, right? I don't have time to get into that. That's going to be part of the trading section of the Mastermind 2.0 when we get into it. So if you want to learn how to do that, then make sure that you apply for the Mastermind 2.0, which will be sometime in towards the end of September. That's when we're launching it, okay? So I don't have time to get into that now. That's neither here nor there. If your stop limit hits, right? So say the price goes down and your stop limit hits at 44.0925 at 4 points less, remember that the multiplier is 50, right? That means that 4 times 50 is 200. So I know that my max loss is 200. It's never going to change if my stop limit is there and my stop limit gets hit. It's never going to change. What happens if my profit taking hits? 44.2725. That's 14 points above, right? 14 points above. So 14 times 50 is, I believe, $700 if my math is correct. So if I lose $200, right? If I gain, I make $700 if our target profit hits, right? So this automatically makes this a 3.5 to 1 trade, which is perfect. if you know what our A+ trade requirements are. This is perfect. Now, how much money do you need in order to take a futures contract? Here's the rub. You need a margin account, okay? You cannot trade futures without a margin account. But remember, you don't need $25,000 to pattern day trade. Now, margin collateral changes by platform, and it changes depending on the price of say, ES. But if you look here, for instance, in Thinkorswim is going to have the highest collateral, right? And you drop down and you go to futures, it tells you what your initial margin is here for every contract. So if we go to ES, which is the S&P futures, you'll see that you'll need 12,320 for one contract. Now, this may seem crazy to you, but you have platforms like TradeStation, like Tradeovate, and like NinjaTrader, where the collateral is much less for day trades. So on those three platforms, as far as I know, for day trades, the collateral is only $500. Okay. Thinkorswim is going to have the most expensive collaterals because they are, I would say, subject to the most regulation, because they are one of the biggest platforms, and also they're entirely in the US, et cetera, et cetera, et cetera. So on those other platforms, the margins are a lot cheaper. Okay. On Thinkorswim is going to be more expensive, and you're going to need 12,320 and you're going of margin in order to take one contract. Okay. But as you saw from my risk to reward, one contract is usually enough. Especially if you're a beginner, you don't want to trade more than one contract because of that multiplier. Now, here's the good news. For those of you with smaller accounts, right? Instead of ES, which is called the minis or the E-minis, right? The mini S&P 500, you have something called MES. This is micros, not minis, but micros. And if you notice, the multiplier is 1/10 of the minis. So especially if you're a beginner just starting out, you want to stick to MES as opposed to ES. It's the same chart, right? So here's ES and here's MES. Same exact chart, same number on the side, moves the same, 44.13. But it's 1/10 of the collateral. So instead of 12,000 on Thinkorswim, it's only going to require 1,200 of margin. And instead of every point equaling $50, every point equals $5. So much slower moving. So in that trade that we were talking about earlier, right? 4-point loss instead of 200 is 20. And a 14-point gain instead of 700 is 70. So still a 3.5 to 1 trade, by the way, just much smaller. It allows you to not panic, especially if you're a beginner or you have a smaller budget, right? It allows you to not panic, to stay in the trade, to monitor how things move. And then eventually you can graduate to ES. Okay. So same thing for the NASDAQ. You have NQ and you have MNQ, right? NQ, the multiplier is 20. So for every full point on NQ, it moves 20. MNQ, for every full point, it moves 2. Okay. We went over that, and we went over micros versus minis. Okay. So you can, again, just to recap, you can only buy or sell a futures contract. You cannot do anything complicated like neutral strategies. There are no selling, calls against your shares. There are no selling cash. There's nothing. It's just either I think the market is going to go up, so I buy a contract, or I think the market is going to go down, and so I sell a contract or I short it, right? Now, in terms of how to determine whether to short or to long, or how to day trade, which is something that we do every single day, I cannot possibly get into day trading here within a reasonable amount of time. But as you can see here, all of our day trades are issued every single day. with the risk management tool that you saw me use. So I show you exactly where my stop loss is, where my entry is, why I took the trade, whether I'm going long or short. We also have 2 other analysts that go through this as well, right? Actually, these 2 analysts that we have are strictly futures traders. I'm the only one out of the 3 analysts that actually sticks to day trading options. The other analysts will do option selling strategies, but from a day trading perspective, they're both strictly futures traders, and one of them is a pro at funded trading, right? So if you were interested in going the funded route as well, you will get some help. I personally am not a funded trader, but she is, right? And a lot of people on the Discord are also funded traders. So if you look at TradeWinds, for instance, you'll see a lot of people on funded trading platforms passing evaluations, right? It's not just like this is a funded trader here with a bunch of funded accounts. Here you could see the Apex funded trading accounts as well, right? And he's using a trade copier. So if you were interested in that, which is a whole other subject, you will have tons of support as well on the Discord. All right, let's see. Any last minute questions? Anyone starting out use MES? Yes, exactly. Need minimum margin requirement though, depends on broker and how much. Yes, Tradeovate, TradeStation, NinjaTrader, all 500. Thinkorswim is going to be more. Fidelity, you cannot trade futures. Webull, you cannot trade futures. And Robinhood, you cannot trade futures. You can on E-Trade. Why would anyone trade anything else but futures? You're right, bro. I mean, here's the reason. Day trade, I agree with you, Milan Patel. I agree with you, bro. Or sorry, if you're not a bro, I apologize. I agree with you, fam. For sure. Day trading, I'm in the same boat. Like, why would you day trade anything else? Unless you're doing, again, I do this on SPX quite a bit. But unless you are selling call spreads or put spreads at the tops and bottoms on SPX, which can be very lucrative, in general, why would you day trade anything but futures? Because it's so precise. It's so precise, right? Now, in terms of option selling strategies like cash your puts, covered calls, leaps, poor man's covered calls, you cannot compare to options. But day trading, I agree with you, Milan Patel. So can you place a stop loss on this same as buying stocks? Exactly. You can place a stop loss on this immediately. So if you enter a trade, which I cannot do because the market's not open, you could actually set a stop limit here. Oh, I can't enter a trade. Oh, awesome. Okay, I guess in Thinkorswim, what the hell? Oh my God, I just closed the trade by accident. Hold on, let me buy it again. Right? So say I entered long here at 44.1325. I can set a stop. What did I say in that mock trade? 44.0925. There. There's my stop limit. Right? And you can see here. That's why I love Thinkorswim, by the way. There's my stop limit. And you can also set your take profit, bro, at the same time. So what did I say in that mock trade? 49.2725. 40, or sorry, what did I say? 44.2725. There you go. So not only do I have a stop limit, I have a take profit. Now, if you don't set up a conditional order and you just do it this way, then when one hits, you're going to have to manually cancel the other. So remember that. Unless you do a conditional order, which you can do, but I'm not going to go over it in here. Is teachable access linked to WAP? We're not on Teachable, Nikolai. We have the courses are all hosted on our website. We're not on Teachable. What about when price gaps like with NVIDIA earnings? We played an iron condor for NVIDIA, Brett, and we made 80%. And secondly, there are no futures on stocks. So I don't know what you're talking about. And thirdly, even if there were futures in stocks, you could set a stop limit like this. And fourthly, there is no gap up with futures. The trade's 23 hours a day. Ola says, thanks, Z. Very useful info. I've had a few aha moments during the session. I appreciate you. Wow, this is a gem. Loving this. Appreciate you guys. Amazing information, bro. Motivated so much that I get into the next mastermind. You just got approved? Hell yeah, Rohan. I'm surprised they answer you that quick. That's amazing. I don't know enough about my own operations. I have people that run that, but that's amazing. Theo says so much potential. Thanks, Z. You did a super great job. Appreciate you guys. So beneficial for me. Your content is great. So this is just one session. Imagine this twice a week for 4 weeks and not, blowing through it, like actually going through how to trade, how to set up your trade, how to set up your stop limit and your take profit, how to find A+ setups, how to know whether the market is seeking liquidity here or here. Right? You guys see me do this on live all the time. Don't believe me? Go back and watch my lives on YouTube. I need my 26-year-old brain instead of my 46-year-old brain. No, man. You just need a repetition. If your brain was 26 years old, you still wouldn't catch up to this in one session, man. This is hard shit. Nobody becomes a professional at anything in one go. Right? I don't just take you out to the basketball court and teach you how to shoot, and all of a sudden you're freaking Steph Curry. That's not going to happen. Reps. It's all reps, regardless if you're 26 or 46. As a matter of fact, I'm in my early 40s now, right? Thankfully, I don't think my mind is less sharp, but you're much more emotionally mature. I don't revenge trade. I don't take it out on the market. Right? Your emotions are much better in your 40s than they are in your 20s in general. So you actually have an advantage. Does futures trade end at 4 or 5? I went over this, Dan. It's right here. Sorry. Here are the hours. There's a break between 5 p.m. and 6 p.m. EST every day. That's it. And also the benefit is that if you have a job, futures trade at 23 hours a day. Now, outside of these hours, which is basically 8 p.m. to 4 p.m. EST, you're not going to see much volume. But this is a huge range here. So regardless of your position in life, there will likely be a time frame that you can trade. Will there be a recording of this available? Yes. Do you plan on doing an updated Thinkorswim option setup tutorial? What do you mean exactly? I plan on doing a whole mastermind. Yes. Extremely valuable info. Been a part of your Discord since pre-COVID. Appreciate you. Milan Patel says, I am a bro. All right. Thank you. Thank you for telling me. Do you trade or recommend trading Forex? No, I don't care for Forex. Nothing against it. I just look at all this shit that I have to manage, and the fact that I can create income by just selling options and I don't need a side hustle. I can't. I just don't have. I don't really have the capacity to yet introduce something else. This is enough for me. What do you think about Moomoo platform? It's for clowns. Moomoo is not a real platform. And I wouldn't trust a Chinese company. So definitely get on a real platform. I don't care for Moomoo or Webull, and definitely not for Robinhood. Right? If you're not in the US, you got Interactive Brokers. There's no excuse. If you're in the US, you can still use Interactive Brokers. You can use TradeStation, Tradeovate, Thinkorswim. How much is the price per tick for oil? I already taught you how to look for this. So I would hope that you would Google it and look yourself to get in the habit of looking up this stuff. But it's $1,000 multiplier. Okay. For every 1 full point in crude oil, which is CL, it's $1,000. Now there is a micro, just like there's a micro for NASDAQ and for S&P. And the micro is 1/10 of that at $100. Can you speak about the concept of futures and how to play them? I just joined. No. I just went through a long session on futures. So watch the recording. I'm not going to go over it again. Apologies. I'm a 76-year-old senior who loves you. I've learned so much from you. I love you too. And appreciate you. Big thanks. Big thanks. I appreciate you guys. Thank you guys. Thank you guys so much. How do we sign up for? All right. So I'm going to put 2 links here. Here's how you sign up for Mastermind 2.0. Get on the wait list because there's going to be limited spots and we're not going to accept everybody. Here is the Mastermind wait list that you definitely want to get on and apply. And if you want access to the Discord monthly, which is the cheapest way to get into the Discord, you won't have access to the Mastermind, but you will have access to my trades. You will be able to chat with me every single day. There's the link to the monthly, and make sure that you use the code MM27 off. What I love about you, Z, is that you do fundraisers for folks who are hurting. I appreciate you. Yeah. Well, I haven't taken a dime off of live streams since 2021, I believe is when we did that. So yeah, it's either gonna go to St. Jude or gonna go to right now we're doing fundraisers for Maui, obviously. So for those of you that said that you're from Hawaii, we definitely keep you in our thoughts, and you guys definitely stay safe out there for sure. But this was amazing, and I hope that you guys got some benefit out of it. We did cover a lot, and I apologize that it is a lot, but I guarantee you that this is the type of information that unlocks a wealth of potential for the future, right? This is stuff that was only available to the select few. Where else can you click buttons and generate income off of risk-defined strategies, right? So hopefully this will one day replace your side hustles, and hopefully this will one day replace your full-time hustles if that's one of your goals. But the Mastermind is going to be, like I said, a more comprehensive, drawn out over the course of an entire month. So what you see here, this is just one session. So imagine the type of value that you get for an entire month, right? And obviously we go at a much slower pace because we only have a limited amount of time here. So I appreciate you guys for joining. Have an amazing rest of your Sunday. If you join the monthly, I will see you in there. If you get approved to the Mastermind and you get the lifetime, I will see you in there as well. And for those of you that just follow me on YouTube and Instagram and Twitter, I'll see you on there as well. But appreciate you guys. Have a good rest of the Sunday. Peace.